Dylan, you're gonna get your wish today. I think you paid
you're
for.
Gonna shut up. You're gonna shut up finally. Yeah, I get it.
I'm gonna have to. I'm on mute. I'm gonna go on mute. A-hole construction people outside. I don't know what they're doing, tearing something down or building something. It doesn't matter. It's loud, and I apologize in advance to anyone listening.
Doug,
that you don't get to listen to me.
I think you should have listened to those eviction notices. They're eminent domain is taking your house right now. You should probably get
banging on that door.
There. Yeah,
so putting up a high-speed rail or something.
Yeah, because that's something we do in America a lot.
So you're gonna be on one of those bounty hunter shows. I've seen those.
Yeah, running from the law, running from Dylan. I feel like it's just Dylan saying, "All right, man, time to leave."
Yeah,
there it is. Jesus.
So something funny happened the other day. Well, not funny by age of the MGA standards, I'll say. I was driving home, or driving across to my parents in Norfolk in the UK, and had the Spotify linked in on the phone and was listening to a selected playlists and stuff like that. And as it tends to do, right, it jumps to whatever the next show is when the playlist is finished, and it went to the age of the MGA.
Wow.
And my wife goes, "Wow, Dylan has a fantastic voice for podcasting."
Well,
it's true.
Thank you.
It's true.
Thank you.
Come across really great on it. So does Doug.
And then did you say you should see his face?
I said he's got a face for podcasting.
That's unfortunately true.
Dylan, you said you're growing your beard out. What's the occasion?
Piracy, I'm assuming. I mean, actually, in this case,
Strait of Hormuz.
Yeah. No. I don't want to be blown up. No, it's there will be a party in a couple of weeks down in Florida, and I'm going to be going, and it is a pirate theme, so I figured I'd grow out my beard. I'm dead serious.
I'm not going to dress up at all. I'm going to go as a corporate raider.
Ooh,
like Gordon Gekko.
Nice.
So a 3-piece suit.
You enjoy that Florida heat in that 3-piece suit. I'm looking forward to seeing that.
Hey, you said you had a story about a race you wanted to tell us?
No, definitely not. I don't know what you're talking about.
It's very confusing sometimes. You like talk about things before the show, and I think you want to talk about them on the show, but then you're clearly like, no.
On air and off air, right?
I don't want to talk about it. We need to have.
I said after the show. Nothing
or
to do with anything.
After hours show, maybe.
No.
Scout.
No.
I have. Who did I speak to? Someone. Well, we have TJ on tomorrow, and I was hanging out with him in the Virgin Islands. Good time with the Accelerant crew.
I did say that. I don't know if you saw that, Doug, but I did mention you and your business partner, Sven. I saw you went to the Virgin Islands. Sven went to the Hartford in Connecticut, right? So clearly, you can tell who's the real boss of that company.
That's true, Sven, because that's where all
the trips.
Hartford, insurance capital of the world. That's where the real executives go.
You took one for the team, didn't you? On your trip?
I learned a few things about TJ's podcast, which we're going to talk about on the next episode. But we need to get a neon sign. I think we're lacking in some accoutrement for the podcast. We also need Accelerant's money. I feel like that might be helpful in our production value.
We're back on a trusted platform, though, for everyone who's observantly watching this.
Growing quickly. I don't know why people are wasting their time listening in, or maybe it's just Chinese robots that like us.
I hope so. I want them to train their AI on us and clearly they are based on the post that Doug made the other day.
Trying to give you that post, 2 cigarettes. Great. I didn't even ask for that. It just like
That's
knew.
Not the one I'm referring to. I'm talking about the age of the MGA AI post.
I don't remember that one. No, the robot burning down the insurance company. That was great.
Yeah, that's
with a cigarette. Soon. Tony Kanas lit cigarette.
Nice.
I'm trying to tell a story here, guys, or relay some information. So I don't remember who I was speaking with, so the story's not off to a great start. But this conversation did happen. It was the head of mission. Why can't I think of his name right now? Great guy. He was also at the Virgin Islands. He is all down for at Target Markets doing a show before the event and having drinks on stage and getting the audience a bit lit as well. He was all for it. So
wow. Hold on. So a live after hours? So this is just.
I don't know if it'd be live. We probably still want to.
Okay, I'm sorry.
Yeah.
I apologize. In person after hours, but also with a studio audience.
Studio audience, all of Target Markets, drinks.
Sounds like
and stories about the insurance space.
And our entire time on this podcast.
Listen, we have a high-powered exec that wants to come on and talk. Okay. I feel bad that I cannot think of his name right now. He's listening. I know he is. He's gonna be like, what the hell, man? I know his resume. He used to work at Bowl.
He clearly made a great impression on you last week at your event.
Listen, we've known each other for a bit. He's good buddies with Alex Bond. We should call Alex up and ask what his name is. Jim Duane. There we go.
There it is.
Listen, I'm just getting old. It's not a slight on anyone.
Lack of coffee, lack of sleep because the construction crew outside of your house trying to knock it down. Yeah, I get it.
I'm still getting back off of island time, guys.
Yeah, that Atlantic time will really kill you. That 1 hour difference for only half the year from East Coast time.
Yeah, I don't even think it was on right now.
Exactly.
I noticed the time was the same. I've never been before. Very nice island. Oh, one more story, and mostly because our guest isn't here yet, so we just gotta maybe kill a bit of time. Got on the flight home, up in the air for about 20 minutes or so. Somebody cut their finger off in the bathroom door, like their pinky. I don't know how it happened. And it wasn't all the way up. It was like dangling off. Oh, and then started having a panic attack. So like we can make it. It's a 4-hour flight to DC. Just started losing their shit. So we had to turn the plane around. We landed in San Juan, Puerto Rico. We're there for like an hour and then took off. It was very annoying. Got stuck at DC overnight. Dylan, I should have drove John to Richmond and hung out with you.
You should have. Yeah. How in the heck do you get your pinky ripped off in a little flimsy door of a airline? I mean, those things you can wiggle those things. They're nothing.
Yeah, but imagine you like got it caught in the door as it slammed. Like maybe you're like holding it and like I don't know. I didn't see it happen.
They're aluminum. They're nothing.
The sheer number of doctors though on our plane was worrying. Because they did the thing. Is there a
worrying? Is there worrying that there's a lot, or there are a few?
Yeah, like what are all these doctors doing traveling instead of healing people?
Well, there's a hospital on St. Thomas.
Do they move between hospitals to heal people?
Well, I mean, because it's a tiny little island of 55,000 people or so. They have most of them are traveling doctors and nurses where they're hired on for contract periods. So
every single one of them was on
they also have a medical university down there. So
a lot of doctors.
There we go. This is fabulous content from this story, Doug.
But, Peter, your guest isn't showing up. What are we going to do about this? Should we call an audible?
All filler, no killer, I guess today. Let's.
That's like. Should we do Cockney rhymes?
I will send a message while you guys do
that. Porcupines, right?
I have no idea what we're talking
about.
Tell
no lies. Porcupines, tell no lies.
I've never understood that. I've heard these things. They mess around with it in TV shows and movies. I have no idea what it means.
Dylan, speaking of something insurance related, what did you think of my son's golf swing?
Incredible.
Right?
He's going to be a CEO. He's better than me. He was rocking it. Was that a hybrid club?
It was a hybrid. Yeah.
Yeah. First of all, I can't hit a hybrid to save my life. I don't know why. Yeah. I'm bad at golf in general. That's most of the reason. But I was like, wow.
He doesn't like to lose, and golf is not a good sport for that. I feel like, because he was really crushing that ball, but then his short game is for shit, and he also missed just a gimme putt and lost it. This municipal course. I'm like, all right, buddy, this is like the first round of the season. You are crushing the ball compared to last year. Maybe we can think about the good things in life. Yeah,
I've done some investigation about our guest, and it could be error from one of us. me, that when we sent the invite, there was a Google Meet link, which confused everyone. So I've resent a couple of times with this link. So any minute now, we should have our.
This is a
guest.
high-profile guest for us to screw up with.
Boy.
But by us,
Yeah, it's pretty common though, isn't it? Let's be honest.
We should have a top 10 list of true F-ups that we've done.
Yeah, having the after hours at the formerly lower.com stadium was our biggest F up, and our biggest save was not publishing that.
Not publishing.
Yeah.
Big F up trying to switch over to Riverside last week. That was awful.
That didn't work out. Yeah.
No, short-lived Riverside.
Oof.
We don't want your money. Even if you said we're going to get it for free and sponsorship of $1 million.
We didn't say that, Riverside.
Yes,
just to be
we
clear.
do not want that money.
Yeah, I'll take $1 million. Yeah,
Nope.
thanks.
Nope.
I'll do the editing if I have to.
Yeah, that was, that was Rob's fault, wasn't it? He fell on the sword for that.
That's okay. That's all right.
Okay, we do have our guest here now.
Oh.
Peter, do you want to do a little quick intro?
Yeah, I've had a long time to plan it with my mistake of sending him the wrong link. So thanks for the patience, Sam, who's waiting in the background.
We're gonna make him wait. We're gonna make him wait.
Yeah, longer. Now we do another 15 minutes rambling, Sam. So this is Sam Nee Robinson. I met a couple of times, most recently at Target Markets. Sam works for Guy Carpenter and the Global Capital Solutions team. I'll let him explain exactly what that is because I read a few of the words from the website and it sounds pretty complicated. So we'll hand it over to him to explain. But what Sam does a lot is focus on, as the name suggests, getting capital for these entities. And I think for our MGA audience, it will be fascinating to understand just how many options there are and what the capital landscape looks like today for this. So yeah, cool. There we go, Doug.
All right, should we bring him on?
Let's go.
Sam, what's up, man?
Sam.
Hi there, guys.
We are so sorry that Peter's bad at his job.
Peter had one job.
The one link I sent, and I sent the wrong one.
Sam, we are former. Well, you're still there. I'm a former Marsh guy, so it's always nice to meet brothers in arms.
It is.
How have you been at GC for a while?
Yeah, about 5 years, 5.5 years.
Okay.
So
yeah, we didn't cross paths then, which is probably a good thing. I was told. So I worked in the legal department at Mercer, and as an attorney, and my boss a couple of years ago reached out. She's like, we had a big celebration because the statute of limitations for any contract that you were working on has expired, and we're no longer worried. I was the business people's best friend. I was like, limitation liability, whatever. Let's get this deal done. But definitely was not favored amongst the actual legal crew in Mercer.
That's a big job. That's what keeps it all afloat.
Try to. Yeah. So, but yeah, let's chat some MGA stuff. So, I've heard your name around. We haven't had the pleasure of meeting yet, but definitely doing good work. Trying to get that capacity for people. But maybe. Peter, or Dylan, have we had a broker on yet? I don't think we have.
I don't think so.
Nobody likes Sam. So we're gonna pretend you're the first if you're not Sam. Maybe real quick I assume a lot of the people who are listening know kind of what the role is, but at a high level, how are you helping MGAs kind of with those first steps?
Yes. Yeah, for sure. Yeah. So I guess if I and as you say, a lot of people may know this, but kind of I can give a quick kind of overview of where I sit within Guy Carpenter, because it's Doug, as you know, it's a big organization, also within the wider Marsh organization, even more so. And so I sit in London. I really do two things at Guy Carpenter, and they are interlinked, but one half probably less related to MGAs. But as my kind of wider department name suggests, called Global Capital Solutions, that role there for me personally is all about raising risk capital, primarily for the Lloyd's of London market. So syndicates, who many of them are capacity providers to MGAs, as you'll know, We kind of sit in the background, typically work with the C-suite to basically raise the risk capital for these businesses. And if there's a 100 odd syndicates in Lloyd's, we have many of them as clients, where we're raising capital on their behalf, and that can come in kind of all shapes and sizes, which I can go into. On the other side, more specifically related to MGAs, myself and a colleague and friend, Henry Sanderson, kind of look after what's called emerging risk solutions at Guy Carpenter, which is a fancy way of saying we handle stuff, lines of business, new opportunities that people don't know what to do with. And they typically come in the form of MGAs, either completely de novo new, or maybe they've been around for a little bit and they're trying to scale to the next stage. And the role there is more of a traditional, we're capacity reinsurance brokers. So we're out sourcing capacity for people. Our role is then to structure that, how we or for the client, how they see best fit for whatever their goal or kind of MO is in the market. And that could be, delegated placements, binders, line slips, facilities. It could be fronted reinsurance placements. And then, as I say, the kind of broader capital piece can all kind of interlocks in the back where, this wouldn't be me, but we have people in other teams that, can raise equity for MGAs. We've got other capabilities across Guy Carpenter, which we can get into, to basically service them as a set of clients across varying lines of business.
So tell us about you, Sam. How do you get into a role like that? It sounds quite diverse and a lot of different things going on. What was your background before you joined Guy Carpenter? Yeah,
sure. Yeah, so I as I say, I've been at Guy Carpenter about 5.5 years now. Before that, I worked outside of the market as a geotechnical engineer at a similarly big American consulting firm, which builds everything from sports stadiums to bridges to roads to nuclear power plants, and so quite a different role. My education was more kind of earth science, like climate modeling related, which is how I came across the industry. And as you guys know, at least my experience, most people I speak to, they either kind of know someone or knew someone in the market and kind of was introduced to it that way, or like truly fell into it. And I guess we have, at least being sat in London, kind of have the benefit that it's a big part of the city and the firms that work there. I was the latter, very much like moved to the city, was kind of more originally interested in the analytics and modeling side, kind of because of my education in the engineering world. But ultimately was offered a role at GC, and then kind of that was about 5.5 years ago. We had a bit of a restructuring. Some people left to join a competitor, and I was fortunate enough to kind of be given an opportunity, as often is the case when those kind of events happen, to move into our capital solutions team. And that was quite early on in my journey there. So kind of very much, I'd say, accidental, but then, my experience with the company at least has been, if you stick your hand up and you're interested and proactive with things, the management there are very kind of growth oriented and kind of give people a chance and, kind of let people prove out like their model or whether they think they can bring revenue in. And that was certainly my experience.
Excellent. And just to complete the background here, it's also a NCAA Division I student athlete scholar. What did you play?
Yeah. So I was still am a track runner, mid distance endurance runner. So different kind of different part of my life. But no, it's something I've done since I was young. Been fortunate to have a lot of friends and meet a lot of people along the way, who many of them much better than I am. But yeah, Dylan, as you say, I was kind of, at least I was never going to be a pro athlete, but going to the US on a scholarship was kind of the peak in a way. But it's a great sport. I mean, I'm fortunate I can still do it today at high national level, it's been a good journey.
Have you ever competed against Peter?
I have not. No, we've spoken about it, but I think my Peter, you're more of a kind of truly long distance ultra, and yeah.
What are
Yeah, I
what are
have
your
to. I'm
distances?
very clean
Yeah.
on this podcast. Sam is elite. I am not. let's have that clear.
I'm pretty sure Peter was talking about how he really wanted to tell you about his time from yesterday, right?
Oh no,
yeah, how
no,
good it
we'll
was.
quickly move on from that.
Top
But
50,
I have
right?
said to
50 out
Sam,
of 500, Peter. No, hold on a second. Top 50 out of 500. That
is correct. In a very small regional race, that is correct. Sam, one of the things I've always said is we're going to do a run at target markets where you do your easiest of easy runs and I do my hardest of hard runs, and we should just about fit for that.
Sam, what distance were you running? Like miles, 800s?
Yeah, exactly. Kind of, anything 1500. My kind of specialisms, I guess, would be 1500, 3K, 5K, 10K on the road in the winter.
It's still very long distance. I was a 400 sprinter, and
right.
I feel like even the 800s. Every once in a while, we get called up to do an 800, and we're like, that's too long. That's double what we normally run. That's a lot.
Yeah.
I love our guest's expressions when Doug says that, because Sam's like, I do not believe this at all.
Yeah, no, I'll pull
Doug, I can confirm Doug was pretty impressive as well. He's very.
I wasn't not impressive. I ran. I wouldn't say impressive. I looked good in the singlet. I think that was it was like a great way to date.
Rock that back out for an episode, I reckon.
Listen, I'll take the picture out. Let's live the glory days.
Really
Nobody wants to see me in a. Dylan sometimes has to like hang out with me on the beach, and he's like, "No, I'm all right."
Yeah. That's why I left Miami early the last time I was with you. Like, we were like,
fair enough.
He was like, "I want to go to the beach." I was like, "I'm going home early."
I'm out.
Yeah.
Do you know something else that Sam does that everyone should ask him about after this show? You send out a newsletter with loads of information, some of which I understand. Maybe you could give us a bit of background on that.
Yeah, sure. No, it's kind of something I started this year. I don't know. It's very kind of you, Peter, to call it a newsletter. I don't know if I'd formalize it like that just yet. But it's, as you guys know, brokers. We have kind of like a whole host of information, insights, data, etc. And one of our jobs, I think, and like we'll get into, I'm sure, is kind of like, what's our view on the market, what's going on. We're if I think about underwriting, you go very deep for the most part, like broadly, you go very deep into certain areas and specialisms, whereas broking, you obviously have people going very deep in certain areas, but a broking house, in its entirety is like very broad across the market. And especially the bits that I work across, I'm fortunate enough to meet people like yourselves kind of from all different parts of the market. And so part of it was kind of to try and pull together some thoughts and ideas, and just how the market's evolving. We talk MGAs, but whether it's the Lloyd's market or in insurtech, AI, whatever it is. And so that Peter, to your point, that was kind of the rationale, just like sharing some of those ideas with like close participants and friends in the market, and I guess trying to kind of spread a little bit more about what we're doing and at least personally what I'm seeing in the market from my point at Guy Carpenter.
And Sam, how do we get a hold of that and our listeners?
Yeah, I mean, I can share my email, or if you got your email, it's purely kind of I send it out, on under my Guy Carpenter email. There's kind of like a market update of what's going on, so can get you those details and get.
Dylan, if you do some research on our guests, you'd already have access to this, like I did. Sam, I spent all weekend reading all of them. I'm just joking. I'm going to though. I want to read these. They sound good. We will in the show notes. We'll tell people how to get to it. So you'll get 0 additional follows from us. But
Doug's mom is very interested in reading what you have to read. Yeah, right. Yeah.
Sam, are you going to be at Target Markets next week?
I'm not, unfortunately. No, that we've got lots of colleagues who are going, but there's more likely I'll probably be at the end of year one in October.
Yeah.
So are you guys going?
I am. Peter, are you going to be there?
I think it's just Doug. No, I'm going to the full year probably.
Yeah, I'm going to the annual as well. Yeah.
I got to represent the show all by myself, guys.
Oh,
I'm going legit this time.
Show will be out of business. Yeah.
It's probably maybe I can find some new hosts. I went last year under the radar, Sam, and got in a bit of trouble. So this year officially going.
Nice. Oh, well,
yeah,
enjoy
the
it.
good folks at
Sunny Dallas. So
Yeah, that's a nice one to go. Right, let's get into something then. So you're sitting there in a role, and you've got this cycle where a syndicate comes into you and they say, right, we need to look at our own capacity and things like that. That must be an extreme process to go out and raise the type of money to fund these things. What does that look like? If you could give us kind of the high level view of it.
Yeah, for sure. Yeah, and do you mean kind of where it's like an MGA capacity raise, or rather a syndicate?
Well, I was interested in both, to be honest, but starting with the syndicate, just because we obviously speak to the MGA capital raise a lot in this show, but taking a step further back would be very interesting.
Yeah, for sure. Yeah, so most as most people know, I mean, Lloyd's is a marketplace made up of 100, I think might be 110-ish syndicates today, all shapes and sizes, and a lot of the big names, Hiscox, Liberty, people like that, they're part of multi-platform, multinational organizations, whereas so they form part of a much bigger strategy that isn't just in the Lloyd's market. A lot of the syndicates, 30, 40, 50 of them, so it's a decent percentage of the overall market, are what we call third-party backed, or third-party capital backed entities. And what I mean by that is if you're, a small or, mid or even large size syndicate, you're basically running a mini insurance company, and just as an Allianz or a Generali or whoever it is needs to hold, kind of match their assets and liabilities in the market, so does a Lloyd syndicate. Now, the kind of one of the amazing things about Lloyd's is it's ultimately, and I'm not the first one who said this, but it's basically a mega transformer, if we use that term. So just as in the ILS world, insurance-linked securities, you can transform risk and securitize it and basically sell it into the capital markets. Lloyd's basically does the same thing. So the corporate structure of Lloyd's, you have kind of what's called corporate members, which are basically quasi special purpose vehicles, which can plug into syndicates, and every syndicate has at least one, but there are thousands of them. And this comes back to the original kind of, at least back in the 90s, the Lloyd's names, the high net worth individuals that Lloyd's is in a way is still known for around the world. And these were wealthy individuals who are putting capital at risk behind syndicates. And so back in the day, if you got a stamp from Hiscox or whoever it was, it would say, Hiscox on behalf of its members, and those members were today they were what's called corporate members, but back in the 90s and before they were just called members, and it was individual capital they were underwriting on behalf of. Today it's kind of flipped on its head. Probably 80-90% of the capital in Lloyd's is corporate capital, so it's coming from these big multinational, multi-platform carriers, entities. But increasingly, and this is what my role but really the wider team at Guy Carpenter's role is to bring in this capital. So be it hedge funds or pension funds, family offices, asset managers, really anyone who looks at Lloyd's for what it is, which is an uncorrelated asset, kind of in the wider economy. And we're basically matching syndicates with that capital. So we're working on behalf of syndicates who each year have to put a business plan into Lloyd's. They have to get that approved. They have to get that signed off. And that is an incredibly detailed kind of and thorough process, by line of business, almost sometimes down to the individual risk level, depending on how big some of it, ends up being. That needs to be signed off by many levels, the syndicate, a managing agent, and ultimately Lloyd's. And then it's people like myself and others in the market who basically on behalf of the syndicates look to go and raise that capital. And so in a way, it is very similar to an MGA capacity raise process. You've got a business plan. This is something you want to do. Go out to the market. For an MGA, it's people with rated and licensed entities. With Lloyd's, it doesn't have to be. It's all collateralized, and so the market is a lot bigger. But then there's a lot. There's a much bigger range of kind of people that come in or want to access Lloyd's, and that it's our job to try and facilitate that and encourage investors into the market.
Sam, for the big name people, that come into Lloyd's, those individuals, or they've had a storied career and then they come and do it again. Kind of, are you also helping with those? Sounds like those are less so now, but those are the ones I feel like always grab the headlines. Like, yeah, every carrier has a syndicate, but if it's like an individual that's just been a rainmaker, underwriter for the last 30 years, they come in and they, it's very splashy. Is it the same process? Like, obviously they're putting that plan forward and, they have the same guardrails and, requirements to meet, but from you're raising on that person's brand instead of like the institution of Hiscox, for instance. Are there big differences in that process?
Well, no, Doug, you're 100% right. It is very, very similar. I mean, the same as it is with an MGA, the same, I guess, in a way, if you're, doing a general fundraise, like with VCs or whatever it is, exactly all of those things, the brand, the track record, the management team, all of that matters. I mean, in Lloyd's, well, in our market, I think it probably matters a lot more actually than other markets because it's all built on trust, as you guys know. Trading throughout cycles, trading long term, and partners, be it a syndicate with its capital or an MGA with a capacity provider. How can people become stickier and trade more with each other? So yeah, no, especially when there's new startups, new entities. I mean, there's been a lot of new syndicates the last 12 months that you've probably seen in the press, and so much of that is built off the personal relationships and the brand and the trust between people, and so yeah, that's key.
And I'm asking because Dylan and I are thinking about starting a syndicate without Peter, because we have an MGA that we're working on without him, and we want to keep maybe cover holder should be next, and then we'll go syndicate route.
It's all right. Sam and I will do our own business. It's fine.
So maybe taking it to the MGA level now, and it sounds like maybe that's very, very similar process, but less guardrails and less requirements, maybe smaller amounts of capital. Obviously, that's a realm that you're working in as well right now.
Yeah. Yes. Yeah. Exactly. So I mean, for me personally, as say, kind of working. Very closely with a friend and colleague, Henry Sanderson. It was really his brainchild, to be honest, during the pandemic, looking at least for Guy Carpenter in London, what was the company doing, specifically in the insurtech, or we just call it kind of broadly like emerging risk. What was the company doing in that space? I.e., did we have an offering? What clients did we have? What even comes into that kind of definition? And it's always changing, by its nature. And Henry kind of, went out there and he's got a background in kind of cyber and innovation underwriting, and would also be a great guest on the show, I think. But he, spoke to the market, spoke to MGAs, and as brokers often do, you just become a market maker. You're a syndicate, you're trying to grow. What type of business are you after? Would you support XYZ type of business? And then on the MGA side, or the kind of the client side, do you need capacity? Where are you trying to grow? And so, around the time I joined, he was kind of formalizing that plan, and we got to know each other and partnered up, and as I say, had great support from the executive at GC. And basically went out to try and prove that, look, there is actually a market there. And I think, you guys, in many ways, you're much closer to the insurtech market than I am, but it's gone through some cycles, whether it's fundraising challenges and then picking up again. I think the Lloyd's lab does an amazing job at kind of shedding a light on the types of stuff and products and entities that are coming through. But that's kind of my little world within GC. Guy Carpenter, obviously, his role is as a company is much broader. I mean, we're reinsurance broking is always the core kind of driver of the business. That for MGAs that can mean putting reinsurance in place behind issuing carriers. But that's a very we've got teams all around the world, region, product, jurisdiction, etc., that work on lots of different lines of business, lots of different entities, MGAs. The kind of delegated binder specialist side of things, is kind of a core part of what we do as well. Putting those contracts together, does require expertise. The processing and the payment side of it is quite different to reinsurance. And so again, that requires individuals who really know what they're doing. And then we kind of touched upon some of the capital solution side of things, where as things scale, Doug, to your point, do you go from MGA to setting up a syndicate? Do you need to raise equity or debt or something? And we've got an banking advisory team that does that. Portfolio solutions, what we call kind of broadly in the market, reinsurance market, is something that's coming through. How do people look holistically across? If you're a massive carrier and you're writing 100 MGAs, is it efficient to be buying reinsurance for each of them individually, or actually can you put in place one program that gives diversification, gives protection, etc.? And so there's kind of a lot of touch points, I guess, from my world, like day to day, like going to target markets, meeting an MGA, can we help with your capacity, through to what are you trying to achieve in 3 to 5 years time? When there'll be a lot other people involved, much smarter than me from across GC that could help.
So Sam, there's a good number of listeners here who do not have an MGA yet, right? They're in an underwriting role, they're in a tech role, they're in a claims role, whatever it may be. And sometimes even it's from a different industry. They understand, certain niche. They're a geologist and they're like, hey, I want to insure some rocks, whatever it is that they're looking to do. And they don't know where to begin. And so they're listening to our show. And one of the things that we really owe a duty to a lot of these people who want to build a startup, like where do they start? And I'd love to get your view on that. This person doesn't have a $20 million, savings account that they can just pour into an MGA day one. They're looking for all this expertise. Guy Carpenter has a lot of expertise, but it's also that costs money. So how do you get this new MGA off the ground, in your opinion?
And Sam, before you answer that, Dylan, do you know that Sam is a geologist?
I understand. Yeah, I know.
Oh, I didn't know if you looked at his LinkedIn page and that was like a joke you were making. It was a geologist.
Yeah, no, I got it. Thanks.
Okay.
He also did mention in this show, but I saw it on his LinkedIn, but also in the show, he's talked about
I didn't want you to get
being an engineer. Yeah.
Making some geologist jokes later on that got us in trouble.
Yeah.
There is an MGA. Sorry, Sam, go on.
No, I was just going to say I don't think I'd qualify as a geologist these days, but so
that's okay.
And I was going to make a very stupid flippant point that there is an MGA called Rock Stone Underwriting right now.
No way.
Yes, the geologist MGA, right?
Is it?
I'm not sure they're insuring rocks.
It's like D&O for people who are maybe doing
for rocks.
Yeah, I was thinking maybe like
rock stars. I was
thinking fracking, but that's okay.
All
right, Sam. So
Sam,
back to
totally
the basic question.
now.
The most simple way to repeat that question is: how does a single individual start a new MGA? Where would you lead them to start? What references? What resources? How do they get there?
Yeah. And it's a great question. One we get quite a lot. I mean, whilst we do work with a lot of startups and early stage individuals, founders, setting challenges is kind of, is going from to actually having a capacity conversation. What we find works well is you need a mixture of that kind of specific industry, whatever product line or area that you're focusing on, experience and background. Doug, back to your point, like what's the individual's brand? How can they prove that they've got the expertise, be it, insuring, rocks or fracking or whatever it is. I'm not an advocate for fracking, by the way, but it's how can they prove that they know that sub industry or vertical that they're looking at, coupled with the insurance side of things, because as you guys know, our industry is riddled with jargon and specific terms and acronyms, etc. And it's a complicated. It makes it more complicated than it probably needs to be. So that if someone approached us and said, right, how do I start? The first thing, well, you've got to find a good co-founder, partner who can speak that insurance language. And the reason is, you need to be able to confidently sit in front of an underwriter and articulate in insurance terms what it is that you're trying to do. So that would be the first point. I think the second point, kind of more practically, MGAs, they're capital light entities by definition. You're underwriting on behalf of someone else's capital. However, there's a lot of different ways you can go about that, and I think it's one of the trends that we're seeing. Peter, something we've spoken about, kind of MGA, pods and incubators and accelerators. There's a number of entities that have evolved in the market, I think, to basically serve this and answer this exact question, because 20 years ago or 15 years ago, MGAs aren't a new phenomenon. As with all things in the market, they go through cycles. I think the modern MGA entity does look quite different to what it might have done in previous cycles or in the past. But before, it was a very, as with a lot of the industry, it was a who do you know, what do you know, and it was kind of a select few who maybe controlled a book of business, were able to move it somewhere, had the right relationships with capacity providers. Whereas today, and you guys know this better than me, there's just been this massive proliferation of one, access to data, two, access to the market, but just technology being able to facilitate. You don't need a 20 person or 10 person legal and operations team these days. You can tech can do a lot of the heavy lifting, but you still need a regulated entity, and that's where these kind of incubator and accelerator platforms, people like, you mentioned Rockstone in a way, kind of doing that, but Fidelis with its Pine Walk brand has done that very well. One Advent, Pro Global, DA Strategy, kind of some of the big names in London, but there's entities in the US as well, and I think that's why we're seeing this kind of emergence of these entities, and they're what the role they're providing is a couple of things. One is the kind of infrastructure and the licensing infrastructure to house, to be the regulated trading entity, which you need to be if you're setting up an MGA. Whilst it's quicker, arguably, to set up an MGA than a carrier, there's still a lot of regulation to pass through, and so there's that side of things. But then there's the kind of practical, payments, premiums, processing. Are you onboarded with, XYZ carrier or syndicate, etc.? Have they gone through KYC checks? There's so many barriers to go from here's a business plan, underwriting, XYZ, through to right now I've got a binder, with live capacity where I can now go and sell that to retail brokers or into the market or wherever it is. And so I mentioned a lot of entities, Guy Carpenter isn't one of them. And the reason is really we sit alongside these people. Our job really is facilitating and structuring capacity or capital for people. Maybe in the future, well above my pay grade, there's a world where we have some kind of incubator entity like that as a way for us ultimately to win and grow our business. But today we're sitting very much like in parallel with these incubator entities, kind of holding people's hand, as part of that journey, going from like day one, I've got a plan, to day 3, okay, now I have a regulated entity, and how do I get capacity?
Yes.
Sorry, go on, Dylan.
Yeah. So what I'm hearing is, for the 3 listeners that's important to, right, which is the majority of our listeners, they
all of them,
it's
all 3.
It's really hard. Maybe you shouldn't do this, because it seems like, I think the reason there's not a definitive, here's how to build an MGA, right? The concept of the MGA blueprint, which is something that we're very interested in effectively building on this team here. But the reason there's not like a build an MGAs for dummies book, and that is because it seems like in that decision tree, there's so many, well, it depends, right? And so in order to actually document how to build your MGA, there at each decision point, there are so many options that take you down a completely different road. And it's, I mean, what you're saying, Sam, is it's tricky, right? Like,
well, so this is what I was going to bring up, is that, Sam, I think you guys as brokers are in an interesting spot where you can take, the way you get paid, or at least if you work like most brokers, is on contingency, right? So you're not spending time with somebody, beyond, maybe kicking the tires. If you're like, this just isn't going to work, it's gonna be very difficult, or here's the challenges, like go solve these first, and then maybe come back to us. But I think now, to your point, like there's these platforms that maybe give you more optionality, whereas like 10, 15 years ago, you'd be like, I'm sorry, this just isn't going to work, right? We don't really have any thoughts for you. And now you can go to the numbers that you listed in, or the entities you listed in the UK and Europe, or like here we have Mission and Balance Partners and Octave Specialty, and Accelerant. They're just, I feel like every couple of months there's new platform that at least I learn of, or is popping up and giving you now more optionality to maybe talk about potential clients of like, there's stages to this, like go do this, maybe, or go do one at Mission, for instance, right? And maybe the economics aren't the way you want it to be, but you also have no reputation. So you got to build that reputation. And if this is truly something you want to do, build this MGA career, that's a great starting point, for you to do. Get one and done, get it acquired, and then come back to us, with what's next, and then you probably have more, more room to maneuver at that point.
Yes, yeah, Doug, you're both 100% right. I mean, it's not that it's I don't recommend it to anyone. It's just there is a lot of steps, and Dylan, to your point, everyone in the market is looking at it. If you're a capacity provider, if you're a regulator, if you're on the operations side, if you're a broker, everyone's looking at it from their own lens. And our industry has always, often for good reason, but in areas like MGAs, it struggles where we're a very siloed industry. And so you speak to someone and they tell you one thing, and then you say, oh, now you need to go speak to a broker to find your capacity. Now you need to go speak to the regulator to get regulated. Doug, you're right. There's a lot of options in the US. There's a lot of options in the UK. I mean, from where we sit, reinsurance and is a tool to allow capital to enter the market, be that behind a carrier, a cedant, or an MGA. What we do at GC, at least on the emerging risk side, the idea really was get in early stage with clients, and even if we're not performing that role like that some of these other entities do, we stick to our knitting, like we're brokers and capital advisors, but really hold the hand from, okay, launching a new product through to, we have, clients where, okay, they set up an MJ, then you set up a syndicate, and then you capitalize it, and then you grow it with reinsurance. That's kind of our expertise, but you're right. There was a gap in the market for these entities to come in and kind of house and incubate MGAs, and I think that's where a lot of these entities you mentioned have done very well because of it as that market has grown.
Lots of changes, Sam, from your 5 years on a macro kind of economic level. Lots of changes, seems week by week at the moment. What's the attitude in general and in the current kind of, where would you describe us as as at in the current market cycle for some of this?
Yeah, exactly. I mean, so, the last kind of 4 or 5 months, obviously we've had at least from a reinsurance perspective, we've had a couple of big renewal dates, for 1st of January, obviously a little while back now. More recently, 1st of April is another big date, as you guys will know. I mean, we're entering a period of a softening or soft market, and that is off the back of a number of years. It's certainly true in Lloyd's, but generally, the reinsurance market and insurance cedants have for the most part performed very well. And broadly speaking, like, more capital is coming in and has come in, and there's been relatively low. I mean, although it doesn't feel like it with everything that's going on in the world day to day, as you say, how quickly things are changing, Peter. From a traditional reinsurance standpoint, relatively benign, loss activity. And the reality is, it's losses in capital that still drives the reinsurance market cycle. So if we even talk about AI, like, I think AI is going to shorten, depending on how we define it, and not even AGI, but the developments with like foundational LLM models, and every day it's like, it seems like more and more jobs are suddenly obsolete, which I don't think is quite true. Cycles just get shortened. Access to data is easier. People have more insights. You can scale and deploy faster. But the drivers, at least from our perspective, reinsurance, are still exactly the same. It's how available is capital, and what are the losses, and what is driving that. And AI can't influence that, at least certainly not on the loss side. You may be able to have better insights into how you can mitigate or prevent losses, but it still comes down to the availability of capital. So to answer the question, I mean, we're in a period of a softening market. It will continue for a while. For MGAs, it's a double-edged sword. It's good and bad. It's good because carriers and people, syndicates, capital, everyone wants to grow, and they want to grow in new areas, new territories, new products. And so, that means people are open to ideas. They may be trying things they wouldn't have done historically, from a line of business or from an expertise standpoint. So that's a positive. So if you're setting up a new MGA today or thinking about it, it's arguably a good time to do so, especially if you layer on the efficiencies and the scalability you can get with technology. The downside or the challenge is, there's a flight to quality, and the economics are squeezed. There's less margin in the market, and therefore there's less there's less to go around. So it just means it's, especially if you're a startup, it's tricky, because how do you prove, Doug, back to your kind of point at the start, like the brand and the individuals, how do you really prove that becomes more important than ever. So yeah, that's the macro. I mean, who knows? If I knew when the market would turn, you'd be a very rich person. But so no one knows how long or how long that'll be. Historically, hard market periods have kind of been 3 to 4 years, followed by 6 to 8 years of a softening market cycle. I think that's going to be compressed. I think because of the access to data and the insights available, I think those cycles will get compressed. But yeah, that's kind of a whistle stop, like where I think the market is right now, at least from an MGA perspective.
That's great, Sam. And a question for everyone. I'm really interested in everyone's take on this. Do we think softening market will mean some of these MGAs no longer are in business in 12 to 18 months?
Depends which ones. I can't name names, but yeah. There will be some.
I kind of expected you to name some names.
Yeah. Well, I know some of the ones he wants to say out loud, but
so bad. And who else wants to say them really badly? James Thaler, who we're going to have on, and he's like, there's just people that know too much, and we're all too kind, I think.
Yeah.
All right. The problem is, Sam, I'm an outsider originally from from the industry. I was an attorney in it and kind of fell into it. Like you were at one point as well. I think we all were, and it can be kind of a club atmosphere sometimes, and I don't like that. I want people to come in, but I think sometimes we get people in who are like, insurance is dumb. You guys are so backwards. We're going to come in and we're going to change it dramatically. And I've already seen this cycle happen twice now. We're in the probably the third iteration of it with the AI part, and it's a little bit annoying. And I get why maybe people from the insurance space are like, that's cute that you think that, but good luck, and we'll see you in 5 years when your idea or how you approached this space blows up. So that's, I think you probably see this sometimes as well, but yeah, we get a little annoyed by it, or I do on the show at least.
So Peter, I think to answer your question, I think the obvious answer is yes, of course. We're going to lose people to softening. I also think we're going to lose a lot of people just because of poor execution of businesses. I think that's much more frequent in the startup world than for any other reason. So it'll just expose them more quickly because they aren't able to float into a hard market and succeed, right? They have to have underwriting discipline, as a base standard to operate in a softened market. So yeah, I mean, I absolutely think so, but I think it's going to be just already piling on to it, to a operational issue, fundamental core issues. Sam brought up earlier, you don't need a 10-person legal department and for an MGA. And while that's, certainly a stretch, I don't know anyone doing that, in the MGA world. They're doing the exact same thing, but just with a different role, so there's, they're bringing in way too many people in general. And to be quite frank, without naming names, there's E&S carriers, full stack carriers created in the last 5 to 10 years who are doing the exact same thing. And of course they have so much capital that they're able to survive it, but making poor decisions on the systems that they either build or are buying, throwing people at problems that technology could easily solve is an incredibly common thing. Saying, hey, we need more premiums, so we need more underwriters, when again, technology can really lend a hand there. So yes, technically you need more underwriters if you want massive amounts of more premium, but the reality is it's probably a distribution marketing issue that's not bringing you enough in submissions in the door, and you thought throwing underwriters at the problem was going to fix it. Now all your underwriters are doing 2 quotes a day average, and you're wondering, why are we not making any money? And it's because you have 2 quotes per day per underwriter. That's your issue. So fix the underlying problems with that.
Dylan, do you know what department in a young MGA doesn't have enough people?
Claims, definitely. Yes. Claims.
So Sam, I actually have, I make fun of Dylan for his love of claims and wanting to bring up into every episode.
I tried to avoid it this time, and you did it. This is on you.
But I actually have, right, we're in this softening cycle. I think there's going to be some washout. Some of it might be claims related, underwriting related. 3 years from now, maybe your job gets a little bit more difficult because you have people coming up for renewals and you're trying to help them. How are you dealing with some of that? It doesn't have to be just claims related, but something didn't quite work out, right, over this period of time where they had capacity and now they're trying to get re-up on capacity. How do you smooth those edges? Like what resources do you kind of bring in to help people in those situations, which I'm sure come up, hard or soft market, but probably we'll start seeing more of them, I think, just where we are.
Yeah. It's a great question. And I think it goes back to the kind of, at least our kind of way of operating, with our clients in London is around, how do you make people stickier for each other? So, what I mean by that is there's not just a single point of contact, and this over time as things scale, this is what happens. But, okay, you've got a syndicate offering capacity to an MGA. For that syndicate, that's probably one of multiple contracts, that they're writing and evaluating, and you've got to always do that on its own merits. Does it stack up from an acquisition cost point of view? Profitability. Doug, to your point, has it had a run of claims? Like, how does this fit with the wider portfolio, syndicate's portfolio? And then the same on the MGA side. If you've got one or multiple carriers, you want them to be a good trading partner, but you also don't want, it's obvious, but you don't want all your eggs in one basket. Eventually, when you scale, you want multiple partners. What we try and do, we don't have a huge client base, deliberately, because we want to grow and expand across our clients. So, we've got a syndicate that also is an MGA. The example there being, we raise their capital, we do their reinsurance, we do their MGA placement, we raise some equity for them. But what it allows us to do is like market make across all those entities. Are you a reinsurer that's also putting some equity into the business? Okay, suddenly you've now like tied people in, long term, because as we all know, these are all long-term trading cycles. So how do you tie people in, tie them together? Not to force people to stay if things are going wrong, but more people want to trade with people they like working with. And if you support a business and there's multiple ways that you can kind of access that business, that generally works better for people. So that's how we tend to approach it. Now it's hard to do in practice. I guess it keeps me at least in a job, which is good. But I think you're right that this cycle, every cycle is slightly different. And this one will be as well. It's making people stickier with their partners is always a thing we try and do.
Dylan, the next time you hear of a MGA just shipping everything to a TPA, just feel good that you're helping Sam with job security with that.
Perfect. You're welcome, Sam.
Thank you.
Sam, we appreciate your time. We got to. I don't know if you've heard the show before. Peter has. We have a way we like to close out and get a little bit more personal, if you want, on this.
For sure. Yes.
Yep. I was waiting to see if you had listened to the show before, Sam, or you were just avoiding that question.
No, I'm ready.
Yeah, fair enough. We end, Sam, with a question on legacy and how you would like yours to be professional, personal, combination of the two. Completely up to you. Yeah,
no, it's a great question. It's I haven't thought a ton about it at this point in my career yet, but it's the stickiness of partners point is something that I enjoy, and what I mean by that is, I've been very fortunate to work with founders, people much less risk averse and much more impressive than me, and be a small part of them growing their business. And if I could do that and continue to do that, that I think would be a great legacy. And GC's an amazing platform, I think, globally to be able to do that in. But it's working with founders who do what they do because they're passionate about it. And Doug, you mentioned earlier, people coming into insurance trying to change the game. Some people have. It's difficult to do. But when you find those people, people like yourselves, it's great working with them, and you want to trade and work with them as much as you can. For the near term, it's kind of continue to grow, what we're doing in the emerging risk space, and kind of work with people that we like working with.
Very cool. Well, hey man, it's great to meet you. Thank you for spending an hour with us here and chatting. I assume it's okay for people to reach out on LinkedIn. We'll put your info in and tell them to sign up for your newsletter. I will be signing up. I'll send you my info. I'd like to take a read.
Me too.
Yeah, we apologize for Peter's mistake, leaving you high and dry.
Yeah, I'm terrible at my job as personal assistant to these guys.
God, this Peter. At least it wasn't me doing it. We wouldn't be doing the show right now.
True.
Cool, Sam. Well, hey, look forward to meeting you in person. Hopefully, coming soon here.
Definitely. No, thank you very much, guys. I really appreciate you having me on.
Right.
Yeah, really enjoyed the discussion, and hope to see you soon.
Cool. All right. Thanks, buddy. See you later.
Bye.
Hey, did Sam say we were game changing? I don't think
I don't know. I'm going to write that
maybe
on my
it was a
LinkedIn
mistake.
now.
It probably was a mistake that he said that. He
Speaking
didn't
of
mean it.
mistakes, Doug, Peter didn't place.
Whoa, where's this going?
Yeah, that's
Yeah.
going. Peter didn't place 50th. He placed 45th in his race, I
Sorry,
believe.
I don't know. I'm not good with math. It's
I
a lot
think
of
that's-
anything above 4 is kind of my limit.
I hear you.
Number 4.
Yep.
So even more impressive, Peter. Those 5 people
that's
were
top
fast.
10%, top 9%. Wait,
Should have been
8%.
higher, guys. The last bit of the race did not go great, but that's for another day.
Well, you got a newborn. You got a lot going on, Peter.
Yeah,
we've
we've all got our businesses, right? But
Do you think I would have done better than you in the race?
No, I don't think
Okay.
that.
Well, there we go. See, you beat the 3 of us.
I think maybe the first 400 meters you could have done better.
Yeah, I don't even know right now. I'd probably just break my ankle if I tried to sprint.
Yeah. I think maybe Dylan's daughter would have beaten me. I think that's probably fair.
Yeah.
Honestly,
She's a good
Peter,
tester.
I mean, I know you run a lot of distance and everything, but probably in a 400, I think that might be actually tricky. So,
yeah, I think that's fair. I think this is exactly the type of race that the Age of the MJ audience wants to see.
yeah, let's see it.
See one of the co-hosts being humiliated by Dylan's daughter.
Yeah, by a 15-year-old girl. Yeah.
First of all, she's 14,
Yeah,
and
she's 14,
and listen,
There we
she's
go.
5'10". It's not like she's small. She's
Yeah.
she can,
And I'm 38 and
that
busy.
Yeah,
So,
yeah.
Fair enough.
Peter, great find, great guest. Super interesting. I think getting more into the nuts and bolts of what he's doing. Actually, I wanted to chat with him about cover holders, and we just had too many other things to get into, like them helping build and set up. I'm sure they're some of the capital requirements that come with that, the enhanced capital requirements. Also very interesting. Marsh has a big captive practice as well, so I'm sure there's some inner workings between that group. So we'll have to have him on another time and chat more.
I think one of the things that's been eye-opening for me, Doug, you've been in this a lot longer and with your various projects in the past, but everyone is going to someone for money, right? I mean, we go as InsurTechs to venture capital for money. They're going to raise their funds. It's and as you go up through the process, just as you do from MGA to syndicate, being in amongst those conversations must be pretty fascinating to move those types of numbers that Sam's helping allocate.
Yeah, I mean, he's basically, an investment banker for the insurance space, securing capital and making the deals take place. It is interesting. Like, who has all the money at the end of this? Is it just Elon just out there like funding all of this? What
pension fund of Canada, right? They have a big one, or is it that Ontario fund? Or
it's all of us, our retirement funds. Our retirement funds. We should stop. The 3 of us should just pool our retirement funds and do our own syndicate. It sounds like Peter. We do need you back in.
We could probably fund like a convenience store or something with our retirements.
What if we open like a pack shop next to Lloyd's and called it Lloyd's 2.0, and then that's such a original coffee concept, right? The Lloyd's house, and we're just gonna. Do you think we get in trouble with the FCA? What's the UK regulatory body, insurance body? FCA.
You've got 2. You got the Prudential, which does the insurer side. Yeah.
Are we having a different conversation? What's the regulatory body in
called the PRA, the Prudential Regulation Authority?
No. What's the insurance regulatory body? Am I just
there is the FCA, the Financial Conduct Authority. But insurers fall under the PRA.
No. I'm just an idiot and I don't know what I'm talking about. Anyway, it doesn't matter. Regulatory body. Yeah. Will we get in trouble, Peter, if we start singing insurance out of our pack shop next to Lloyd's?
Yeah, I would think yes, we would. Yeah.
So that idea is done. Would Lloyd's sue us if we did Lloyd's 2.0?
Yes, I think so too. Yeah.
No, you keep asking questions, and Peter's gonna be like, "You're going to be in prison forever."
They probably think it's quite hilarious, and mostly they.
Yeah, we just get away with it.
They would point and laugh. I mean, there is The problem is after you sell that first policy, where they'd be like, "All right, now you're going to prison."
Well, no, the
I do
underwriters
have,
would be like, "We're not taking this. Go talk to Lloyd's 2.0. Those three guys, and buy a
I
pack of
do
cigarettes."
have an
there as
insurance
well.
company idea for you guys to discuss, an insurance company idea, but we'll save that for another show. Get into it.
Peter, make sure you only contact me about it. We remember.
Oh, of course.
I know.
Of
I
course.
know
As
you're.
per-
I know you're
Yeah,
not in
as
the shed right now, but you know it's probably
Peter,
the
are
right
you-
thing to do.
Are you in Spain?
I'm in a real house. Can you believe it? I'm in a real house.
Is that your house or is that Spain?
Things are looking up. No, this is my parents' house.
Because I've seen that picture before, and somehow I associate it with your trip to Spain.
Yeah, I've been
but,
on these shows with this picture and the painting in the background before. Yes.
Did you get in trouble? Is there some problems at home that you got kicked out?
I mean, I'm always in trouble, but yes, the wife is here too. I can confirm.
Oh, okay.
Okay.
There we go.
Yeah.
All right.
Listening
just
to
wanna,
our
you know,
tenor voices.
Yeah, you can let her
Oh,
listen
she'll
to us.
Listen
if
later
she,
to Dylan. Yeah.
Peter,
Yeah.
does she actually like our voices because it puts the baby to sleep?
I think that helps. Yeah, that's
Yeah,
big.
okay.
Big
I would
plus.
put Age of the MGA on and fall asleep. Yeah, most people do.
Ooh, so soothing.
Dylan, did you like that I worked in a little bit of claims conversation?
I like that. I was not even
You
going to try to go claims on this one, but there you
I had
go.
it
Thank you,
waiting.
I appreciate that. You're a
I
sweet
wanted
guy.
to do something nice for you.
First time I'm going to say nice things about you on the show.
We're going to do a little bit of experimentation coming up here. We're going to do potentially some call-ins. We're going to have some friends of the show call in and ask questions of guests and of the hosts. We got some exciting stuff. We might do a surprise guest for Dylan. Dylan, actually, I have a surprise guest for you. It's not who you think it is. You're gonna be very happy when I.
Is it the governor of St. Thomas?
It is not. It is not.
Okay.
But I did see him in St. Thomas last week,
Excellent.
and I'd never met him in person before.
Is that in Red Hook? Yeah,
What's Red Hook?
Red Hook, the town. Yeah.
Oh, okay. I don't know.
Okay.
I just got in the taxi and
You were there.
went to the Westin.
I promise. I know where you were.
Never met him before. We had a great conversation. He met all my expectations of what I know about him. Yeah, you're gonna be very happy when we have him on. And it's an insurance guy, real insurance guy, tried and true, through and through.
Make sure you send them the right link.
I'll have Peter do it, so we'll be fine.
Yeah, that will go well. We should remind everyone. Thank you so much to everyone who follows us on LinkedIn, because the numbers are growing and growing and growing, and we try and mention a lot of people on there. Like, subscribe, comment, share. Really helps. I mean, we're growing this brand. We're getting some great people on. We're going to have some merchandise, as Doug says, alongside it. We're going to do some live shows at Scout and hopefully target markets, all being well. The momentum keeps building. Want it to be a show that helps you guys launch and be successful with your MGAs. So anything you want us to kind of focus on, just get in touch, send your message to Doug, and he can coordinate with Dylan and myself to make it happen.
Yeah, you'll never hear back from us. Okay, yeah, please watch this and listen, because this is all, once AI takes over, this is all the three of us will have. So, and you'll all be out of work that are listening, because AI will be doing your job, so you'll have nothing to do but listen to us. It's perfect.
Doesn't Notebook LM exist? Isn't that what that is? That makes a podcast for you? Can it just do a digital? We're not even needed at this point.
We're screwed. All right. Well, I'm gonna live on my $10,000 a year then, I guess.
Sounds
Government
perfect.
stipend.
Our convenience store in London.
Oh yeah, Lloyd's 2.0 coming for you, Lloyd's.
We
Coming.
probably
Don't
honestly
sue
can't
us.
even. We probably can't even afford a convenience store in London. We're going to
Convenience
need to be on the
store, right?
countryside somewhere.
Yeah. All right, guys. Hey, we got
All
another
right,
one
guys.
tomorrow. Got a good guest tomorrow. Looking forward to this one.
2 in 2 days. Nice.
2 in 2 days.
All right.
Don't get sick of us. All right. See you guys.
Bye, guys.
Bye.